We like to believe we have moved beyond history. But what if we are simply replaying it, faster and quieter? This time, not with metal coins, but with pixels and code. Rome diluted its silver. Today, we digitize our currency. The outcome may be the same collapse, only accelerated. History never repeats itself exactly. It echoes through cycles of power, belief, and money. And right now, we are inside a transformation so vast that future historians may describe it the way we describe the fall of Rome. Only this time, there are no legions marching and no cities burning. There is data, lines of code quietly replacing gold coins. This is the age of digital money, Rome's decline unfolding in real time. For most of human history, money was not abstract. It was something you could feel. Gold, silver, salt, grain. Physical objects valued because they were scarce. Rome understood this instinctively. Its economy rested on the denarius, a silver coin that carried not only value, but confidence. When a Roman soldier was paid, he trusted that coin the way we trust a bank balance today. That trust was a promise, backed by imperial power, discipline, and stability. But empires always grow beyond their limits. Armies expand, borders widen, costs explode. And when taxes can no longer cover ambition, rulers reach for the same solution every time. They weaken the money. Rome began shaving silver from its coins, mixing in cheaper metals, insisting nothing had changed. At first, few noticed. Then everyone did. Trust fractured. Prices surged. Soldiers demanded more pay. Trade slowed. The most powerful economy on earth had been built on metal, and now that metal was hollow. Money lost meaning, and decay followed from within. Centuries later, humanity replaced silver with paper. Notes that claimed to represent gold locked away in vaults. But the game remained the same. From Spain's silver fleets to Britain's pound, empires learned the same dangerous lesson. You can print more promises than you can keep, but not without consequences. In 1971, the United States made the break official. President Nixon ended the dollar's convertibility to gold. That night, money stopped being a claim on reality and became an act of faith. For the first time, the global economy ran purely on belief. Governments could print, borrow, and spend without restraint. Central banks became modern emperors, minting wealth with keystrokes instead of metal. And for a long time, it seemed to work, or at least it appeared to. But every illusion of endless prosperity eventually cracks. It cracked in Rome, it cracked in Weimar. And it is cracking again now, not in paper or coin, but in code. Money has always evolved alongside power. When monarchies gave way to parliaments, gold coins became state-backed notes. When industry rose, banks became national engines. And now, as data becomes the new frontier, money is turning digital, detached from both paper and physical reality. We have entered the era of the digital empire. Money no longer clinks in pockets or folds into wallets. It flashes on screens. It exists as data, invisible and instant. Every payment, every trade, every debt lives inside a vast digital network. It feels efficient. It feels safe. But beneath the glow, the same ancient risk returns. Dependence on trust. We trust banks to hold value. We trust governments to protect it. We trust algorithms to secure it. And almost no one asks the question that matters. What happens when that trust breaks? Rome had silver. We have code. Both were treated as unbreakable. Both were only as strong as belief allowed. When the pandemic arrived in 2020, it tested every system at once. Political, medical, financial. Factories shut down. Borders froze. Economies paused overnight. And the response was the same everywhere. Money was created, trillions of it, with clicks and keystrokes. Rome took centuries to ruin its coinage. We managed it digitally in months. Governments called it stimulus. Central banks called it support. But the reality was simpler. We were printing belief, not value. Inflation followed, first denied, then redefined, then accepted. Because inflation is not just rising prices, it is shrinking value. A slow transfer of purchasing power away from savers and toward debtors. A tax no one votes on and one that never disappears. For ordinary people, the effects were undeniable. Food cost more. Housing moved further out of reach. Savings bought less every year. And while leaders blamed everything but themselves, history told a familiar story. When empires are trapped by debt, they do not default openly. They default quietly, through value. Like rulers before them, modern leaders believe they can outmaneuver history. When growth stalls, they cut rates. When markets tremble, they print. And each time, the pattern deepens. When fear spreads, leaders make promises. But every promise creates dependence. Every bailout weakens resilience. Every rescue erodes the discipline that once gave money meaning. In the digital age, this process accelerates. One decision from a central banker can move trillions. One technical failure can erase fortunes. Today, the stability of nations no longer rests on vaults of gold, but on servers staying online. Rome diluted its silver with fire and hammers. We dilute ours with software. And the next phase is already unfolding. Central bank digital currencies, often called CBDCs, they are presented as progress, efficiency, modernization. But beneath the language of convenience lies something more profound: control. A CBDC is not simply digital cash. It is programmable money. Transactions can be tracked, limited, reversed, or denied. Imagine stimulus that expires after a fixed period. Spending restricted by category. Access to funds tied to behavior, compliance, or policy alignment. This is not science fiction. Variations of this system are already being tested in parts of Asia, Europe, and beyond. Rome enforced authority with legions. Future governments will enforce it with code. The more money becomes digital, the less freedom it carries. Because once money turns into software, freedom turns into permission. Empires do not collapse overnight. They decay quietly, administratively, almost politely. People adjust to each restriction, each temporary safeguard, until control becomes normal. Roman citizens did not wake up one day and realize they were living through collapse. Markets still opened, cities still functioned, coins still circulated, until one day they didn't. That is how trust disappears. Not through chaos, but through routine. When systems rot beneath the surface, while appearances remain calm, stability feels real. Balances on screens feel secure. But every number in an app, every asset backed by promise alone, depends on one fragile thing: faith. And history has never been gentle with faith unanchored from reality. The pattern repeats across centuries. First comes innovation, then expansion, then shortcuts, printing, illusion, and finally, breakdown, not from invasion, but from excess. Rome did not fall when enemies breached its walls, but when its money lost meaning. Britain's empire faded not under attack, but under debt. And today, the same rhythm echoes through spreadsheets, stimulus packages, and monetary interventions. The names change, the tempo does not. Every empire believes it is different. Every empire eventually learns it is not. Technology has made the system faster, but not wiser. Value now moves across the globe in seconds, yet that value steadily erodes. We call it progress, when in truth it is acceleration. Racing along a road history has already laid, only at greater speed. Yet collapse is not only destruction, it is also transformation. Rome did not vanish when it fell. Its laws, language, and structures survived long after its power faded. And perhaps that is where we stand now. Not at the end of money, but at the threshold of change. A reset. A reckoning with the idea that value cannot be infinite and trust cannot be manufactured. The question is not whether the digital empire will fail. The question is what comes after. History remains the true innovator. It introduces new tools, new systems, new currencies, and subjects them to the same test. Rome's silver failed the test of trust. Paper failed the test of discipline. Digital money will face the test of control. Whether we learn before that test is finished remains uncertain. Because history offers one constant truth. Every illusion of permanence is temporary. Every system built on belief alone eventually faces a reckoning. When that moment arrives, when pixels lose authority and confidence turns to doubt, those who hold real value and real understanding will endure. Those who cling to illusion will watch it dissolve, just as Roman citizens once did, holding coins that no longer meant anything. We are not observers of history. We are participants inside it, trading, clicking, and believing in real time. The next collapse will not arrive with flames. It will arrive with a screen that quietly says access denied. That is how empires end now, silently, digitally, everywhere at once. And still, this is not a call to fear. It is a call to awareness. Money has never been magic. It has always been trust. And trust, once broken, is the hardest thing to restore. The answers are not hidden in what comes next. They are written clearly in what came before.